Good morning and welcome to Friday. As always, looking forward to the session. Excited to see those of you that are here, and hopefully we'll get a few more people coming in as we get things rolling. Again, it's Friday. The market is off and running, and that means that there is always a lot to talk about. We do have some positions that are set for expiry today that we'll be able to go over and spend some time talking about and probably have some time to talk about some stocks that perhaps some of you may be interested in. A couple of basic details for by way of housekeeping. If you want to interact with me or with the group, the best way to do it is through the chat. Through the chat area, I'll be paying attention to that throughout the course of the live stream. Respond to questions, comments as you have them. The other thing for those of you who may be new or not familiar with Rebel Income, the purpose of this live stream is to look at the market under current market conditions from the lens of the Rebel Income system. That means that we'll be talking about not only the trades that I've been placing and been holding, but also just trying to take a look at the broader market using the from the standpoint of what that means for the positions that we're looking at, also from a value-based kind of contrarian lens. What do these things mean? So really quickly, just want to go ahead and let's just look at the broad market here, and we can see that things have been really picking up quite a lot of momentum, really over just the last couple of weeks, from a low all the way down here. This is actually this is let me change the intervals here on my chart. These are weeks, so let's go to days. There we go. That's a little bit better. So really just this is about 2 weeks worth of time from this low at about 62.28. Market has really been rallying very strongly since April of this year. But it's interesting. A couple of weeks ago, market was kind of looked like it might be topping out, and during some of this retracement, people were talking about maybe the market's done. Maybe we're finally topping out, and we're looking at the beginning of the end. Well, it looks really like the last 4 days that things have really kind of reversed that sentiment. We've seen a break above this resistance from this earlier pivot high, and the market is pushing to one new all-time high after another, and only up a little bit so far today, but again, it looks like it is marking another all-time high. Hello, Gib. Glad you're here. Comment number 1. So awesome. You get to claim first. So what does this mean? An extension of a much longer bullish upward trend going all the way back to the beginning of 2023? Very possible. It would not surprise me at all, and that does. If we look at when we look at the trend from this longer standpoint, some of these shorter term moves, even though some of them are kind of painful, like this drop in the early part of the year down to the April low that was all driven by tariff fears, it puts all of these in a little bit different light, because what these shorter term drawdowns really mean in the context of a longer upward trend is there are opportunities for the trend to kind of recenter itself. It flushes out a lot of speculators and tends to chase away less disciplined investors out of the market when these kinds of things happen. And I'm not just talking about significant drawdowns. Here's one in early 2023. Here's another one. Here's another one. Some of these can be a little bit more moderate. Now, since this April drawdown, we haven't had anything nearly as serious. Here's a little correction here, and then this little one that we had a couple of weeks ago. But all of these ultimately mean, when we look at things in the context of the longer upward trend, these are very normal, even healthy retracements of the trend, and they ultimately contribute to the sustainability of a of an upward trend. Now, that doesn't mean that things aren't possibly getting a little stretched again. Maybe we're getting a little bit overvalued, or that there couldn't be another retracement here in the offing in the near term. There's all kinds of things that can influence that, but it does mean that what we're seeing when we look at it from that longer view, we're looking at what is looks like a pretty resilient bullish market so far. So that's interesting. What does that mean in terms of being a contrarian? It certainly doesn't mean that my discipline changes. In fact, if anything, it kind of makes me focus even more on the discipline and the requirements of the system that I use. When it comes to Rebel Income, we're talking about not only looking at things from a valuation lens, how discounted is a stock relative to its historical valuation ratios like price to book, price to free cash flow, those kinds of things, but also really putting a focus on the fundamentals of the business underlying the stock. Excuse me. It's easy to say when things are looking very, very bullish for people to say, oh, we can go ahead and it's all pedal to the metal, full gas on. Give my trade calls are not turning up many opportunities. Yeah, but you're pretty connectivity. Okay. For me, it means that I'm pretty selective, and some of these, as valuations become more elevated, I think what Gib you're saying is pretty consistent and pretty on the nose. It does make the screening process for stocks that fit our criteria a little bit more. I'm not going to say difficult, because there's always stocks that. There always are stocks that do fit the requirements and the criteria that we have. It does mean that our lists are going to not be as broad as normal, and that's okay. Again, being selective is ultimately a good thing. So there's always still things that are happening in the market. There's always still opportunities to talk about. The caveat, again, when things are starting to look more and more categorically bullish, there's a temptation to let go of the discipline and kind of jump on board, right? Get on board the bandwagon. Everybody else is making big money with these big moves, and that's what I want to do too. And in my experience, that tends to be a mistake. So I'm going to hold to my discipline. Going to see a lot of stocks. If you've noticed, I've had an increasing number of covered call trades coming up the last couple of weeks, and that's given me opportunities not only to generate new income on stocks that I've been assigned and I'm holding shares in, but also to set up opportunities to make money if I'm called out with some interesting profits. Some capital gains on top of the income that I'm generating with the covered call, more than what is normal. That's one of the kind of the side effects of kind of a bonus side effect of what these market conditions are doing right now. So that's interesting, and that's not a bad thing, but it does it's kind of fun. I'm not going to lie, when you have those kinds of things. And covered call trade on Borg Warner here is a really good example that I was able to place last week. And the interesting thing about this one, I just want to hear before we start talking about some of the put sales. which we'll get into. Borg Warner here is a very, very interesting case. This trend since April, sorry, I'm going to change my color. This trend since April, how does that contrast to the trend that we were just looking at for the S&P 500? The broad market looks very tame by comparison. This is an exponential increase from a low around 24 all the way up here. Now it's pushing 4150. And even more to the point is the increase since the beginning of August, where we went from 34 and now we're pushing up to 4149. That's in just a matter of weeks. Whereas it took a couple of months from April to August to go from 24 to 34. Now, that's not insignificant. This is a $10 increase, but that took about 4 months. Here's a $7.50 increase that took about 4 weeks. That's interesting. I do not expect this to be sustainable, but the interesting part of this from the standpoint of the stock the shares that I own is because I set a covered call, my covered call is right here. The strike price was $37.50. And this is a covered call trade that is set for expiry today, right here. Here's my $37.50. I brought in 70 cents on this. Now that was a nice covered call trade, brought in a little over 2% for a 3-week trade. But now when we look at this chart, oh my, yeah. Here we are all the way at 41.46, and here's my covered call. What do you think? Is that a tough pill to swallow? Because I am going to get called out today unless suddenly this stock drops by $4. I am going to get called out. Jay, same thing happened to you for CVS, yeah. And Barry, your comment here as well is a similar vein. Jumped the gun on Delta Airlines, wrote a $56 call, still made a $2 capital gain from your entry, which is awesome, right? But missed the boat on the big gain. Okay, did you? Maybe. I mean, this is one of the things that we have to. This is one of the things that does happen from time to time when you're selling covered calls, and you have to keep in mind is that as an income trader, one of the things that you're doing when you sell a covered call is putting an absolute cap on how much gain you are going to make if you are called out. Because sometimes this kind of thing happens. Now, I'm on Borg Warner at a much lower price than $37.50, so this is a nice capital gain for me. And to be honest, that needs to be enough. That's kind of the mindset that I think it takes when you are working with covered calls, is you need to be willing to look at something like this and say, well, okay, missed it, but Barry just hit it right on the head. You can't go broke taking a profit. And yeah, thank you, Gib. That's if it still meets the rules, you sell it again. And you're exactly right. You know, this is not a bad result, right? I made money, sure, because stock continued to rally even higher. And so maybe I missed out on a few bucks, but you know what? There's a difference between taking advantage of opportunity in the market and being overly greedy. And I can look at this, thankfully, I've been able to get enough practice with this that now I can look at this and say, okay, that's all right. Good for everybody else that is, maybe still in the stock and and still sitting there up at 41.50. That's great. Great for them. And they'll have a little bit more to talk about at the next cocktail party, right? Doesn't bother me. That's fine. This is a good result, and I like the fact that I'll get called out. That'll free up my capital. I'll have some capital gain on top of the income that I brought in from the covered call. By the way, this is not this current trade on Borg Warner is not the only covered call that I've been able to place. Been able to do a few more on it lately, and that means that, let me see. Well, maybe I'm getting a little bit ahead of myself here. It's been a little while since the last covered call on the stock, so I've held it for a while. But even so, there's been enough other covered calls, put sales, etc., that make the net overall result more than enough. And Barry, as you're saying, it's a marathon, not a sprint. You're exactly right. And Gibb says if it still meets the rules, still another put. That's a great comment. There's always new data, new reports coming out, right? And so if sorry, I'm trying to get centered on my camera. If the stock, I haven't redone the valuation analysis on Borg Warner, but I'm guessing it's probably a little bit closer to fair value now, even if the fundamentals are increasing and the overall valuation is increasing. It's the net value opportunity is shrinking a little bit just because of the way that it's been rallying. So. Yeah, Barry, you could buy that cover call on Delta, buy it back at a 400% loss, but you're not going to, right? Going to be better to take that profit, right? And Jay, my call for CVS is 64, but my break even is 59.51. There's a $5.50 net difference, right? These are all attractive results. Again, CVS picking up some nice momentum here, coming up to 68.54. And so, yeah, there's a $4 difference between where Jay's getting called out at. Same kind of thing, right? But that's okay. That's not a bad thing. It is interesting with CVS. It's coming up here on what could be resistance from this pivot high, a little bit below 70. So we'll see if that holds, and if it just starts to redefine the re-extend the consolidation range on CVS. Yeah, and that is okay. That's not a terrible thing. And here's Delta. Again, picking up some good momentum, and Jay was in here at 54. Sold a 56 covered call, and now it's up here. It's towards 60. Okay. This is part of the. Not gonna say this is part of the game, but this is part of the mindset that we get to learn how to take. And sometimes when the market is really starting to pick up momentum, you'll see an increase in these kinds of moves, in these kinds of positions. And sometimes you're just you're selling. Sometimes your covered calls are a little bit more where maybe I'm just doing good to get a little bit of a capital gain, or maybe to get out at the price that I was originally assigned at. I do that fairly often when the market is a little bit more moving a little bit more sideways. So we'll take this as it is and move on. That's really the only thing that you can do in the final analysis. Okay, so just finish that out by talking about that cover call on Borg Warner, and that actually, Jay, you gave me a segue for CVS as well, because again, this is a stock that's now sitting at around 68, right? And instead of the cover call, I sold the put sale at 63. So here was my put sell. That doesn't mean that this is a better trade, just different wrinkle, right? Here was my put sale. And the stock's all the way up here at 68.35. Now, the interesting thing about this is that since this is a put sale that is set for expiry today, I could Jay, find it odd that your put sale is still valued at 41 cents that expires today with a target of 62.50. Okay, well, that is interesting. That may be the question I would have there is how much volume and open interest there is in the contract. If there hasn't been a lot of movement in terms of trades, that could impact what you're seeing on the options chain. Let me expand this. I'm going to need to go. Wow, even 16 wasn't enough. Oh, there we go. Actually, 16 was. Let's go back. All right. So here's the 63. Here's the 62.50. And so the numbers are a little bit different than what you're saying here, Jay. But look at the asking prices on these. 8 cents, 19 cents, even though the stock is sitting up here around 68, I'd normally expect these to be a lot lower. 2-3 cents, maybe. But yeah, that's a really good question. Why yours are different. I'm not sure if you're on the same broker. I'm on Schwab. If you're logging into a different brokerage interface, maybe they're showing different pricing. Either way, what we're seeing is a function. I'm going to go ahead and I'm going to go out on a limb here, and I'm going to say that for my 63 here, I'm going to bet there hasn't been any activity here, possibly in a couple of days. Well, I take it back. So there is, there certainly is activity here, but very low. So that one doesn't quite apply, but this is just gradually losing value as the day goes on. Now, this does mean I sold this for 70 cents and I could buy it back at 6 cents, more than 90% of my gain. Yeah, that's literally true. And that's maybe not a bad idea just from the standpoint of being able to clear out the trade, reset the deck with the capital that I committed for CVS. Same time, I'm really not planning to place another trade until Wednesday, because I'm going to highlight it for everybody on Tuesday, right? So I'm okay with letting this expire and just doing my normal thing. But there is an advantage to be had in buying this back today before the market closes. Not because I'd be worried about taking an assignment, but just because it would clear out the trade more quickly. I wouldn't have to worry about an entire weekend for the trade to settle. And if I had an idea of what I want to do with the capital next, whether that was to sell a new put sell at a higher strike price, maybe. Let's see, we could go out here 7 days. Little less than 1% at 68. That's not awesome. Here's 2 weeks. Now, this isn't terrible. There's again, the difference between bid and ask is a little bit elevated here. Let's see what the activity is like. Yeah, not a lot of open interest here. This is the main reason that there's a 32-cent difference between bid and ask. Let's go back to today's contracts because I don't want to look at the 6250. This is interesting. This is the reason, Jay. This the day's volume is 8 contracts, and it looks like, I'm guessing that was in exactly last trade was on the 15th. So that is this morning. I'm guessing all 8 contracts here were all part of the same trade, and whether somebody, and that would they did that at 41 cents. Why would someone do that? Hard to say. Hard to say. Could be maybe maybe it was maybe it was one of those cases where somebody set an order, a market order, or excuse me, a good till canceled order in the system and forgot about it. Yeah. Current value is much less, and there are trading knuckleheads. Yes. the reasons why they did this, that's a mystery, right? Whoever sold it for 41 cents made good job, but whoever bought it at 41 cents for today, that was a little bit silly. So 8 contracts, that's 800 shares at 62.50. So that's significant. So in your case, what they're just showing is just that last trading price. So that's interesting. All right. So what does this mean for CVS? My put sell is going to expire worthless. Jay is going to be called out at a nice result, maybe not the full result is around 68.50, but again, we're okay with this. These are nice, happy results. Be an opportunity to recenter. We have a new set of earnings to evaluate and go from there. So Jay's got both the put and the call. So there you go. Barry, not necessarily in our plan, but I just sold 300 shares of WBA Walgreens Boots Alliance for a mere 1% profit. It was dead weight in your portfolio. Yeah, Jay, both of your trade, your call and your put expired today. Makes sense. So Barry, thank you for that comment. I appreciate that. And since we are looking at pharmacy, that is, I guess, tangentially really, I can never say that word and have it sound good. But 1%, and yeah, this is Walgreens just really hasn't been doing anything lately, right? There's just nothing remarkable about it. So I can understand calling it dead weight. And this is one that's been again I've been holding on to this one as well for some time. So being able to get out of it even at a 1% profit, that's okay. now the Barry sold, it will spike, so everybody should jump in, right? That's there's the real market dynamics. When I sell, that's when everybody else jumps in. When I buy, that's when it goes down or it just doesn't. I understand that sentiment. Absolutely. So, all right. There's Delta. Let's see the next. Let's see, the other covered call for this week that is expiring is a covered call on Barrick Mining. And again, this is a similar one, similar concept, our theme, I guess, as what we've been talking about, where the stock has really rallied pretty strongly above my original price. I mean, I'm in here at 2050 on this one, and so it's picked up a lot of momentum, retracing at the moment. My cover call is at 2350, and that's right where the stock is. So this one's going to be interesting to see what happens if I get called out or not. I very well may not at this stage. It could simply finish a little bit below 2350. Any level below 2350, I'm still going to hold my shares, but I'm also in at 2050, so I'm okay. And we've got the stock. Oops. Here's my purchase price, and we've got the stock building this nice upward trend. Even though my line is kind of ugly, it's showing some good positive momentum. So even in a retracement back down here towards the 20-day moving average would not be a terrible thing. So we'll see what this one where this one goes. Barry WBA was no longer paying dividends, which is when I got in it. Yeah. You used that sideways motion though for some other pretty productive overall trades in WBA, if I remember right. So it does look like we'll see on Barrick Mining what happens here on this one. I'm very okay with getting called out of this one. I've held this stock for over a year, and again, I don't mind that necessarily, but getting called out would be all right as well. So free up some cash again. And Barry, unfortunately, KHC and CAG are not participating in the rally. Right. This is one of the, thank you, Barry. I actually appreciate that, because one of the things that's worth opted out, not necessarily opted out, but I see this quite often when we're talking of, when you start to see the market rally and pick up bullish momentum, you usually tend to see the biggest moves in quote unquote kind of cyclical names. So CVS, even though I consider that to be a defensive stock, for a lot of people sits in the specialty retail space, because they've got retail stores attached to their pharmacies. Even though that's not their core business, that's how the market often tends to categorize them. And so that's why they tend to see an increase in momentum when the market is picking up momentum. Borg Warner, autos, cyclical. So it's normal to see that kind of momentum as well. Food stocks, on the other hand, are a little bit different. Food products, it's not that they don't, it's not that these companies don't benefit when the market is, when the economy is healthy. When the market is moving and it is picking up momentum, food product stocks kind of tend to get left behind. And you pointed out some of the stocks that we've worked with in the past years. KHC, just sitting around here around 2750, not really doing anything. These are stocks that I'm holding at much higher prices because I like food product stocks, and their valuations were really nice when I placed those trades. They're even better now, but their trends are just not doing much. And they are seeing some impact from elevated costs, from high interest rates, supply chain constraints, all kinds of things right now. But a lot of these food companies just aren't doing anything. Here's Campbell Soup. Put sale for next week. It looks like I might get assigned on that one, right? Here's Hormel. It's another one that I'm holding. Very often, these stocks tend not to participate in these big rallies. So that's actually not unusual in these cases. It's one of the reasons that they are primarily considered to be defensive. It's not just about the type of business that they run. It's that the market tends to treat them as unsexy. They're boring, and so they tend not to go along when the market is picking up a lot of momentum very, very quickly. So Barry has a $45 call on Magna that expires today. It looks like you'll probably be able to rinse and repeat. Yeah, it has it's been kind of stuck where it is for now. You're in at 42.50. And MGA, this is a stock I updated my analysis on earlier this week, and picking up again some momentum here, but its fair value is up around, I'm going to say it's in the upper 50s. So still got some momentum there, and some room to run. So that's kind of nice. And it hasn't gone as parabolic as, say, BWA, doubling back right now. Yes, tracing down just a little bit, and that could be a benefit. Every time we see a stock, it's in these. Wow, I did not want an arrow. I don't know why it gave me an arrow, but okay. Every time we see stocks in these upward trends and they start retracing them just a little bit, from a momentum standpoint, waiting for the point where they start to find a level of support, waiting for them to kind of retrace toward this, begin to stabilize. These can be good opportunities timing wise. So, yeah. And there's the dividend. Goes ex-dividend today. So, Barry, you get this dividend. And that's not nothing. That's 1% for 1 quarter based on the stock's current price, a little over that. You're in it at 42.50, so that's a nice dividend. That's extra. And if you're getting called out at 45, that's 250 plus almost another 50 cents. So you're $3 to the good on that trade. So Barry, you got a couple of tick marks here. Jay, you got one too. Just because these are all examples of good trades, nice results, and the market is picking up some momentum that is giving you an extra little boost as well. Interesting to kind of scroll through my watch list here and see the stocks that are following the market and the ones that aren't. EMN, a material stock. General Mills, food is not. Huntsman Materials, not. Intel, IBM, Tech, following it. Kellogg, mostly not. There's KHC. Yeah, it's just interesting. Okay. Delta, this is one we talked about, Barry touched on, and this is an expiration for next week. We covered call that I set on Delta at 59 after being assigned at 55. This is one that I was able to set up for next week. It's a nice 7-day trade, or excuse me, 9-day trade. I take it back, a little over a week. Just taking advantage of this momentum. If I'm called out, I'll have about a $4 net profit on top of the $1.20 that I brought in, And again, this is another example of a stock that has been seeing some momentum here. It's a little bit above that price right now. We'll see if it can sustain that. Again, considering this move, the size of this candle right here, I'm not actually confident that that I'm going to get called out, because retracements against these moves are so normal, and there's still a week to expiration here for me. So where Barry was already getting called out, let's see, where is it? Yeah, wrote a 56 call, right? Barry, you're down here, so there's a lot more room here where you're going to get called out, and you're in at 54, right? I'm in at 55, so a little bit higher. This doesn't mean my trade is better. It just means that I've got a little bit more time, and we'll see what happens here. If I get called out at 59, that's great. That's a fun result. Certainly not what I expect. So it'll be interesting to see where this one lands, for sure. Campbell's Soup. This is a put sale. Oops. Yikes, not CPB. I can type. There we go. Campbell's Soup is the put sale that also expires next week. I placed it last week with the stock just really, again, it's not participating in the rally. It's just sitting. It's just hovering. The consolidation range has become even more shallow than I would have expected. I expect it to be somewhere between 30 and 34, and it's 32 to 33.50. Okay, Barry, your call expires next week, just like mine. So we'll see. We'll compare notes next Friday and see where that one lands. CPB is just running very shallow right now, at the very low end of a very extended downward trend. Again, this is not unusual for food companies to not be participating in this rally. That part doesn't really bother me very much. And again, I placed this on July 30th at 32. So it's still above the strike price that I sold, which means that all things being equal, if the stock price holds between now and next week, certainly not a given. So we'll see where that lands, and this will expire worthless, which is fine. I also don't mind being assigned 30 at 32 here. It's very near that price right now, so I very well could be assigned this lower end of support right now. That could be broken pretty easily, and we could see the stock drop back towards this multi-year low. This is a stock that I'm going to have to reset my chart view. There we go. Downward trend started all the way back here at the end of 2022, beginning of 2023. Bottom down here, rallied temporarily, had a nice trend up to this point, and then it's accelerated all over again. That creates opportunity for valuation, for value-driven investors. That's the ironic thing. Kraft Heinz, Hormel's, Campbell's Soup, Conagra. These are all still good companies, right? It's just the stocks aren't following the rest of the market. That's actually not something that bothers me. That's actually something that I like, because that just creates more opportunity to keep working with these stocks. And yes, I've got some Conagra and, for example, KHC at much lower prices than where I bought them at, but they're also still paying their dividends. They're giving me that passive income in the meantime, and then I can also reevaluate and decide if I want to maybe try to leverage an opportunity to sell a new put option much below the price, much below my original assignment price, and try to average down. I have some flexibility to decide how I want to work with that. And that's one of the things about put selling. I beat the position sizing drum a lot, primarily to focus on risk management. But stocks like these, and let's go back to Conagra for a minute. You know, it's down here. This is a long downward trend here for Conagra. I'm sitting, and it's down here around 19. In the meantime, I was assigned here in April at 25. So it's almost $6 below the strike price that I sold. Now, that's not a terrible result. I don't mind that. But that's a pretty significant difference. That's $6 on a $25 stock. That's more than 20% below the price that I assigned it at, that I was assigned at. I sold 2 contracts here. So this was a conservative trade. This was a total capital requirement of $5,000. And yes, this is on paper. I'm in a losing position on this. I'm not saying that I'm going to do this. I'm saying that I could. One of the things that this opens up is an opportunity to think about whether or not it's worth placing another put sell, average my price lower. If I sell 19, for example, and I get assigned, then that would actually lower my net cost basis to about 22. The fact that I set up a very conservative trade means I could consider selling another 2 contracts and keeping proportionality in place so that when or if I am assigned, I still have it is a little bit larger position size at that point, but still pretty conservative overall. So position sizing, if you start at conservative, it also not only protects you from a risk standpoint and money management standpoint, which is the number one thing, but it also gives you some flexibility in terms of thinking about how to possibly leg in or tier in use tranches to acquire these stocks and accumulate a position at more attractive prices. And then when the stock inevitably, remember, all trends are finite, right? All upward trends end. It's just a fact. The same is true for downward trends. Downward trends only last so long. And yeah, this one's been going on for 2 years. But they all come, but eventually it is going to turn back. Here is an upward trend. Oops, sorry, that's really ugly. Here's an upward trend. Yikes. Here's an upward trend through a good chunk of 2023, right? Here's an upward trend through 2022. How about 2019 all the way through 2021? So all of these trends are finite. That means that this downward trend is going to reverse at some point, and the advantage is being there when it does. I'm in at 25. Maybe there's an opportunity to think about redoing this again. I need to rerun some of my numbers to be sure, but that's something that we can think about. That's something that being conservative with the positions that you're taking on initially, instead of maybe doing a full a full position size, if I say that my maximum position size is 5%, for example, on a, let me pull up my calculator, and I'm looking at Conagra, right? So my account size right now is about $300,000. So if I multiply that by 5%, that means my maximum position size is $15,000. That's a total of 5%. That's a conservative overall position size. Now I've done much less because I only sold 2 contracts for a $5,000 obligation. So I'm a third less than 0.5. So 5,000 divided by 300,000. So this was less than 2% when I placed the trade. Increasing that to 10,000, if I were assigned additional shares by adding another leg, will not be a terrible thing, and I could still have room to add up to a third leg in the case of Conagra. Again, these are not recommendations. This is not telling you what I am or am not going to do with Conagra. For now, I'm content to wait and watch and continue to see what the stock is doing. But these are some of the kinds of opportunities that you do see, and I'm not just talking about food product stocks. I'm talking about stocks. This is part of the nature of being a put seller, being an option seller with a contrarian mindset. When you're selling put options on stocks in downward trends, sometimes you're going to be assigned stocks that stay in those downward trends. And that's another reason to be very, very conservative about your position sizes, to manage risk as well as to think about ways to manage the position effectively. So when the trend does turn, you're able to see the benefits of that turn more quickly. Does that make sense? I hope that helps. Got a few minutes left in the session today, and so I'm gonna go ahead and open this up. Talked about pretty much all of the stocks that I was planning to. I want to open this up and let you throw out some things that you might be interested in having the group look at. Whether there's some other trades that you're looking at, paying attention to, or questions that you have, something you'd like the rest of the group to see. Jay, what usually happens with an acquisition? If I'm reading the tea leaves, Jay, you're talking about Paramount, yes? HBI, okay. Haynes brand. What usually happens with an acquisition? A lot of it depends. Jay, looks like they're going to be acquired. A lot of it depends on the nature of the acquisition. Some acquisitions you'll see like this, the company will be taken private. It's very common. It's not uncommon when a deal is announced to see a bump in the stock price of the company that is being acquired. Gildan will acquire Haynes brand. It's interesting. Haynes investors receive $6 per share, retain 19.9% ownership in the new entity. So you'll get $6 per share, and you'll also, your shares will convert to Gildan shares. That's interesting. It's not unusual to see the stock bounce up towards the acquisition price. It's also kind of put a capital on how high you're likely to see the stock rally. Because the news has already set the top end price. When Hanesbrand goes away and becomes part of Gildan, it's $6, right? So whatever this upside is, don't expect to see much more, if anything. In fact, if anything, I'd expect it to trace back towards $6 and probably just kind of trace sideways along that point until the deal closes. Carl, what's my take on CVS? Well, again, my put sell on this one is right here at 63. So again, we've got momentum going on with this stock, right? It's rallying up here at 68. I have got to, let me see here. Let me go back. Let's find. Here we go. I'm just revisiting my numbers. Okay. So here's the here's the fair value target I put for CVS. So this was a trade I put on with a more conservative, not quite as much upside as normal. Hi Jay, thank you. You have a good weekend as well. I'm usually looking for a little bit more. CVS is offering a little bit less upside. I decided that was okay, mostly because I like the company. But that does mean, in terms of additional upside, 7150 is somewhere in this range, and that's close to the top of the range that we've seen here so far this year. It could go higher. We've certainly seen it here up above $100 back in 2022, right? So it's not saying it couldn't go higher. I'm not sure it will. Now, just because my valuation is not that high doesn't mean that it won't. I just don't know, to be honest. The next quarter's earnings could change my evaluation and push the valuation back up even higher above 7150. But for now, I'm seeing kind of probably limited upside, not enough to go back into CVS at around 68. This is where now the valuation is becoming a little bit. The valuation is becoming just stretched enough that I'll probably wait to see if it comes back down. Comes back down towards 60, then there's another conversation to be had. If it breaks down for whatever reason below this $60 range and gets into this territory, then it starts to become really attractive from a valuation standpoint. I don't actually expect it to drop that low. If anything, I think this consolidation range may hold. That's also wide enough. If it drops back down into the $60 range, maybe there's a new opportunity. But with it up around 68.40, pushing up towards 69, it's a little too expensive for a new trade for me. It's getting a little too close to fair value at that point. So I hope that helps. All right, Barry, have a 2050 put on Siri that expires today. Brought in 35 cents for an 8-day trade. That's actually more than 1.5% for 8 days, Barry. So nice job, man. That means 3 of those for Siri. Nice job. That's a good result. Showing some momentum here. I have not looked at this one in some time, so I can't speak to its valuation or its fundamentals. But look at this. Look at this sideways trend. All year long, it's just hovering. That's interesting. All right, everybody, we are at time. Thank you so much for your participation. I really appreciate it. Hey, if this live stream is useful, if you're finding it finding good information from this, please do me a favor and share it with people that you know. The live stream is free. I'm opening this up to the public, so anybody can come into this and participate and start to get some exposure to Rebel Income. So please feel free to share it, and let's try to boost the number of people that we have here in the live stream. Also, you can also always like it, and that's always a good thing. Barry, you owned Sirius some time ago when it was trading in the $6 range. That's awesome. All right, everybody, thank you again. Appreciate your time. Hope you have a wonderful weekend. If there are any questions between now and next Friday, let me know. rebelincomesystem@gmail.com is my email address. Reach out to me on Substack or on Discord. Thanks again, everybody. Talk to you later. Thank you, John. You too.